Hello, today is July 7th, 2022, and it's time for a new stock pick video. As always, I will give a review of the performance of the picks from this time last year first, and then move on to some new recommendations. This time last year, I picked Peyto Exploration and Development Company, which is an oil and gas stock. It was up 36.8%. Then I picked CIBC, the bank, down 11.9%, including dividends. And Information Services Corp, down 33.4% for an average of negative 2.8% in US dollars, including dividends, which compares with the MSCI World Equity Index in US dollars, as measured by the URTH ETF, which was down 14.5%. Now, going forward, I have to say that a lot of things have changed in the last 3 weeks or so. Stock market more or less continued to go down slowly, but the biggest difference was that commodities, starting with copper, were down a fair bit. Copper is probably the single best indicator of current and future economic activity, and a copper price is down year over year around 17%, which is rather significant, and down from the highs earlier this year, about 25%. That's good news and bad news at the same time. The good news is that the inflation that has been raging for the last several months to a year perhaps, is likely to be going down slowly, but over the next few months. And it's been a problem for investors, for consumers, for businesses, for everyone. The bad news is the reason likely commodities such as copper and oil and the commodity prices have come down is that investors are betting that a recession is very, very likely, and that's why prices are coming down. It's the cure for high prices is high prices, and that also means that possibly rates won't have to go up as much as we expected as late as 2 or 3 weeks ago. So things changed a fair bit. So what are we to do now is the big question. With a recession being a very likely scenario, a good idea may be to concentrate on or overweight some recession-proof or recession-resistant stocks, and we still have the possibility of stagflation. So that's another scenario that the market now thinks is less likely than it did about 3 weeks ago, investors in general. And then there's also the possibility of returning back to regular growth with less inflation, a good type of environment for investing. So investments that work under that scenario have to be a big part of the portfolio too. So my first pick, given the above, is for today. Novartis, a symbol NVS, a pharmaceutical healthcare product type company. Very strong profitability and stable profitability. The valuation is reasonable. In fact, it's a little bit lower than it has been on average for the last 10 years or so. And normally people don't cut on their prescription medications and so on, even in kind of slower times or recession times. So we expect the company to be able to continue to perform well. Now, the stock is another matter. Hopefully it does well as well. But here we're getting a good quality company, a decent dividend that's higher than the dividend of the 10-year bond yield, and a strong balance sheet and a good valuation. Things that will make and lower beta stock. The stock is not as volatile as the market. Things that can make investors sleep better at night, knowing that their investments are, even in the stock market, are a little bit more safe than the general stock out there. The next stock that I'm picking for today is one that I picked before. This is the first stock that I picked before in the last 25 stock pick videos. So I've done at least 75 stock picks and a few bonus picks that I've given over time. So the first double, and the reason for that, and I picked it about this time last year, maybe in August of 21. The reason for that is it's a good quality stock. It's one that you can hold for a very, very long time and expect it to work and compound returns fairly well, and it is the one and only Royal Bank of Canada. Boring for a lot. It exists in a lot of people's portfolios already, but there's a good reason why it should be part of most people's portfolio. Now, banks are not recession-proof, so we don't expect that even a bank like Royal Bank that has a very high-quality loan portfolio will be able to withstand a recession. But we don't own stocks just for 3 months or 6 months, or you own stocks for the long term, and over the many business cycles that Royal Bank has operated under, it's been able to do fairly well, and we expect that to continue to be the case. The return on equity is very good, the stability is very good, the valuation is very good too. So a good long-term pick for Canadians, especially for Canadians, as the dividend is treated preferentially for taxes for Canadians. And my next stock pick is going to be one that's going to work in a stagflationary environment and in a growth environment as well. Not so well in a recession, probably. And that's ConocoPhillips. It's an energy, oil and gas company, a large cap U.S. company. Again, good balance sheet, good valuation, good dividend, but subject obviously to the gyrations of the oil, especially oil price. So more volatile than my rest of the picks, but something to have as a hedge against inflation. But we don't now expect as much inflation as we did before, so that's to be said. Inflation should be coming down. And I will have one bonus pick this time around. And this is more on the recession-resistant type stock. It's a consumer staple, Kellogg, the cereal manufacturer. Very strong profitability, strong balance sheet, good dividend, valuation is still good, despite the fact that it's actually up year to date when the markets are down. But the valuation is still good, and the total return on Kellogg over the last 10 years has been about 7%. Meanwhile, the profitability of the company, return on equity, has been very, very high, and the business performed extremely well. So perhaps it has underperformed what the expectations were, and definitely underperformed the U.S. market, as investors during the last 10 years chose to chase other sort of businesses like tech stocks and the like. So perhaps this is the time for stocks like Kellogg to shine. And even if it isn't, longer term, it's still a very good business, and the price is good, so it's good to buy it and hold it for a long time, and allow it to generate wealth for you as an investor. As always, if you like a second opinion as to whether these stocks fit into your portfolio, or an opinion on your current holdings in your portfolio, please give us a call. Thank you. Have a great day.